Netflix and Paramount continue to fight to the finish for who will take over Warner Brothers Discovery. We have more on this with Evan Shapiro, Media Universe Cartographer at eShap. Evan, thank you very much for joining us. And once you're here, you're going to give us a lesson. What is a Media Universe Cartographer before we go any further?
Sure. I take the data that swirls around the media industry and I turn it into infographics, but I do a lot of writing on my Substack newsletter, Media War and Peace, and a podcast, Media Odyssey podcast, and I turn it into insights that people can act upon to transform the media industry and understand where the trajectory of it's headed.
And you've got some charts for us and some looks for what's going on now with Netflix and Warner Brothers and Paramount. Where is it sitting in your universe right now? This whole deal, not deal, maybe a deal, who knows deal?
Well, there's a couple of different things that you should know about this. First of all the companies who have bid on Warner Brothers Discovery, which include Netflix, Paramount, and Comcast, all of their market capitalizations have fallen dramatically, a combined $135 billion since they started bidding on the company. So that's the market looking at these offers and not really seeing the math add up. Netflix's offer, if it came to fruition, for example, would create $84 billion in debt at the company. And the interest on that debt would be $5 billion a year, just the interest. And so in order for and they're not bidding for the whole company, they're bidding just for the studio and the streaming platform. In order for that deal to pay off for Netflix, the properties that they're buying from Warner Brothers and Max would have to perform at 3 to 5x what they've been performing at over the last 5 years. Paramount's offer, on the other hand, is even larger, and they're a smaller company. And so the idea that they can make the math work on the other side is a little bit illogical. You know, what it demonstrates to me is that both of these companies are kind of stuck in their strategy for the next 5 years on creating the growth that's necessary, specifically in Netflix's ecosystem or in their company. When you look at the fact that at the beginning of this year, they stopped reporting their subscriber numbers, there's a reason for that. And what I've seen in territory after territory is Netflix's viewership over the last 3 years has either been flat or down. So they are looking to transform themselves into an IP factory. They look at Warner Brothers and they see the DC universe, the Harry Potter universe, the HBO Game of Thrones universe. And there you can look at that deal right there. You can see the acquisition cost would be about $72 billion plus another $10 billion in debt. And the debt interest over the next 8 to 10 years is so substantial, it just doesn't seem to counteract or it doesn't seem to merit the upside that if a lowered churn on streaming or the increased opportunity around advertising might counteract. So this chart shows you right there that after the course of, this is a 10-year look, after 10 years, at the current offering price, Netflix would still be in the hole by almost $43 billion after swallowing Warner Brothers Discovery.
And you don't think they'd be able to grow because they've brought those two companies together? You don't think they'd be able to grow those numbers at all?
No, there's a number of different reasons for that. So first of all, there's a huge overlap between HBO Max and Netflix. So most HBO Max subscribers already have Netflix, and a lot of Netflix subscribers have HBO Max. And so when you combine those two together, the net gain of subscribers probably isn't going to be that substantial. But if you go back to the chart, you see there's a tremendous amount of upside of let's say, lower churn and increased EBITDA from licensing and other opportunities around the world. But the debt interest alone is just so substantial. The model in the same article that I wrote on Media War and Peace, if you look at that article, I use the Disney acquisition of Fox as the comp. And they're very similar. The price is there you go. Thank you. The price is very similar, and it had less of an upside, but you can see that Disney has ended up, since they bought Fox, worth less today than they were when they bought Fox. And so the concept that this massive acquisition is going to solve a whole bunch of other problems, you have to factor in the cost of the debt. And then once you get that levered, the cost of getting new money goes way up. So it's a very confusing set of mathematics if you're looking to make this make sense.
And so you think it's not going to go through then, do you?
I think Netflix, they currently obviously have the lead position to get it. And, the Warner Brothers board. So what happened in the last 24 hours is the Affinity Partners, which is controlled by Jared Kushner, has pulled out of the Paramount offer. So that leaves Paramount short a decent amount of cash, somewhere around 10, 15, $20 billion short of where they were. So they're going to have to replace that value somehow, which is probably going to have to come through debt, which makes their offer less attractive. The second part of that is the Warner Brothers board, based on a lot of the risk that the Paramount offer has rejected the Paramount offer. Now, Paramount's offer is a tender offer. They're going directly to the consumers to try to create a hostile takeover of Warner Brothers Discovery. So they're offering the shareholders $30 per share, which is higher than the $27 and change that Netflix is offering. But they have to convince a huge section of the shareholders to get it. That leaves Netflix in the lead position to get Warner Brothers Discovery, but the president of the United States has come out against the Netflix offer, saying that any acquisition should or must include CNN. There are members of the Congress on the Republican Party who are against this, but then there are members of the Democratic Party in California. The Attorney General of the state of California has come out against this offer as well. So they're going to face headwinds from a regulatory standpoint from both sides of the aisle. They may wind up with it, but it's going to take most of 2026 to close it. And I wouldn't be surprised if some other buyer popped out of the woodwork as this is spinning around. Most notably, I think, honestly, the company that makes the most sense would be Apple. They have tons of cash. There's very little overlap between those two companies. It would probably face fewer regulatory hurdles, but that's just my own conjecture.
Okay, well, you know what? We're going to have you back on and see what happens with that if Apple does end up in the mix. Evan, thank you very much for joining us. We appreciate it.
Thanks so much.
Evan Shapiro is a media universe cartographer at eShap.